Hello traders, this is Chris Buss with Traders Profit Compass with a technical review of the ARK family of ETFs, spearheaded by Kathy Wood, who has become quite the maven over the past year as her ETF family has exploded in market cap and assets under management. And the reason I wanted to spend some time with it is because, as you know, the technology and bubble stocks have been under a lot of selling pressure over the past week. And with her family of funds squarely in the center of that sector, I thought it would be a good time to really go through and see where the charts are at and provide you with what I feel are the key levels and the trade locations going forward, not only if the selling persists or morphs into something more, but also on the long side, that if you are bullishly inclined and want to get in at a much better entry price, a de-risked price, if you will, in the weeks or months ahead, you'll know where those locations are and you can set some alarms and be ready to go. So let's see what we can find out. First up is the ARKF, the FinTech ETF. In all of these, you're going to see a nice strong uptrend from the March lows. No different here, but you can see over the last couple of weeks, the FinTech has gone from, let's call it 63 down to 54. That's 20% right there. So where do we stand now? Well, price has broken this uptrend line and is sitting right on the 50 EMA here in green. So what I think you could do is alarm 54 in your platform, which is just below the 50. I have the 50 EMA here at 54.64. So I think a break of 54 would give price a free run at 50 down here, where this next level of volume over price support comes in. And then, if things really fall apart, the 200 is all the way down here at, let's call it 43.50 at the 200. That would be your next target. So the key levels on FinTech are 54, key support, and then downside targets of 49 and then 43.50. That's how I see this one. Notice that RSI has broken below 50, but momentum still above the zero line, but we've got this high level PPO bear cross in effect. So our indicators are saying lower at this point. What you would want to see if you were a bull is some consolidation here along the 50 and then a move back up. And then what you would see here on these indicators would be a bottoming formation like this or like this, where this begins to curl up and then puts in a bull cross. That would show momentum and buying pressure coming back into the stock. And once price recovers this trend line, then the crisis would be averted. So those are the levels on FinTech. This is the genomics ETF of theirs. You can see over here in the volume over price profile, we've got a very well-defined level of value here between 90 and 115, which encompasses all of this trading. But notice now price has lost all the fast moving averages. We've got the 8 and the 20 and the 50 all beginning to curl down, with price below all of them, with the only EMA remaining being the 200 down here at 75. Now we've got a nice uptrend line off of this June swing low that brings it right in here into this 90 area. So there's a dual layer of support right here, right now, between 90 and say 92.5. So this has got to hold on ARKG to prevent any further downside. And you can notice that below 90, there's a big void here all the way down to 75. So that would certainly be a trade worth taking if price loses 90. I think you would see an awfully quick move to the 200 at 75, moving through this price void. So what I've done is I've alarmed 90 in my platform, and I'm going to be ready to initiate a short on ARKG if 90 were to break with a first target of 75, and if that fails, then you're down here at 67.50, and probably have, we'll have a lot on our minds if this in fact loses the 200 and moves down here, because once you're below the 200, all bets are off, and it's hard to get that 200 back. So the stock is fine now, but 90 is the key level to watch. Here's their big innovation fund, and you can see that yesterday price lost its 50 EMA here at 137.76. This was the large volume over price support bar. Now price is below. I see this coming down to 120 for a first target, and then you've got a thin zone which would bring it down to 105, which coincides with the 200. And then below that, I've got a third target at 95. Now, this may be a hard trade to take right here, out in the middle of space. If you were to, a great opportunity was yesterday and the day before, where you had to look below and then it rallied back right to that level but couldn't get above. That was your tight objective short. And so if we see any kind of a rally that brings it up here to 135, 137.50, that's your objective short to put that trade on with a stop just above, so that if it keeps going, you've got a paper cut if your stops are hit, but then if it rolls over, you've got some good downside nice downside potential down to 120 is my first start target. I do have a short on this one. I am in the 130, 115 put spread for March, so we'll see how that goes. This is their web ETF, and you can see the profile here is much different than on the other ETFs that we've reviewed. Much more scattered dispersion here, where you've got a big volume over price bar, then a little gap, another big one gap, another big one gap, and then up here. So there's going to be a multitude of layers below for support, but the posture here is still bearish because we've lost 50 on the RSI. We had the big PPO bear cross as this rolled over from a high level, and now price is below the 8, 20, and 50-day exponential moving averages. So for this one, I think the objective level is 155. It'll either find support there or break. I would have an alarm at 155 to see if that might be a potential long there, if things stabilize, or a potential short on a break below with a first target of 145 and then a longer term target of coming down to tag the 200 down here at, let's just call it 125. So there's potentially $30 a downside on a break of 155. Of course, there'll be levels in between where bounces can happen, but I think below 155, you've got to be looking for more downside. ARKQ is their autonomous and robotics segment. You can see that price has rolled over with the bear PPO cross and RSI below 50, but at this time, price is holding the 50 EMA here at, let's call it 87. And then like the last level, I have down here at, let's call it 84. If you get a price break below 84, then you're into this void. And I think price could come all the way down towards 73. And then, of course, below that is, again, the 200 down at 66. So those are your levels here. I would be setting an alarm at 84 or, wherever you want to take that trade the way you interpret it. But I think it's 84. And then see if it stabilizes there. And if it does, that would be a very objective long. But if it doesn't, I think you got quite a bit of downside in front of this one. Below 84, I see 73 and then 66. Print is its 3D printing ETF. Just like the other ones, there's been a big pullback. Now price is below the 8 EMA and the 20. You've got an uptrend line that's coming in as support. So I view 39 as a very key level on this one because you've got a dual layer of support. You've got uptrend line and you've got lateral support. Actually, triple support because you've got the 50 squeezed in there as well. So if there are buyers for this ETF, they should be stepping in right now at the confluence of all these support levels. That would be a very objective long at this point. If you think things are going to stabilize and you want exposure to the space, this is where you're supposed to buy, at value, back at trend with a lot of support below. But like all the others, if you were to lose 39, then I see 35.5 and then a move down to the 200 at 30. So interesting chart there on the 3D printers. So let's do a quick recap. The ARK Invest family of funds is squarely in the epicenter of the technology sell-off. Through their disclosures, which they're very transparent about, they have a lot of thinly traded stocks where they are the majority shareholder held in their funds. And if redemptions come, there's the potential of a downside cascade because when you're a large stakeholder in an illiquid stock and you're facing redemptions, when you go into that stock and try and sell it, you're gonna really move the stock to the downside. So what may happen is is that they may sell their more liquid names, like your Teslas, and use that as a source of funds for the redemptions, because Tesla's in like 3 of the 5 of their big funds. So, let's watch ARK, even if it's just for a sentiment index and you don't want to trade it. If you see ARK beginning to stabilize, that will bode well for technology. So I think these 5 or 6 charts are very much worth our time to keep an eye on, not only for potential trading ops, but also as a sentiment gauge for technology. So that's all I have for you on this section. I will be out with updates if and when I see meaningful changes in these charts, so look for that in the future. If you found the information in the video helpful, I'd appreciate it if you hit the subscribe button and then the alarm bell, and then you'll get notification of all my video content when I publish it. And if you check over in the show notes, I've got a couple of links, one to the blog site where you can read in on a lot of helpful trading psychology articles, along with how-tos on certain trading aspects, and also a lot on trading psychology. And there's also a link where you can register for all my content. That way you'll get a nice email each and every time I publish content, which is nearly every day on the markets, and oftentimes multiple times during the market session on observations, trading developments, trading opportunities, etc. And so we'd love to have you. And you'll also get an invitation to our trading room where you can become friends and colleagues with other aspiring traders that are all working hard to get better. We'd love to see you in there. So have a good trading day. This has been Chris Buss with Traders Profit Compass. Talk to you next time.